When you look at the statistics, you see massive debt, countless examples of central bank desperation, ultra-low interest rates, and we still haven't been able to grow without consistent bailouts. Oddly, people who are invested into the market or their jobs rely on it haven't acknowledged these clear and obvious facts. Pick a point on the map. Who is the worst of the worst? You came here for the truth, so let me unveil that for you. Today we're going to look at China, we're going to look at the EU, we will also take a look specifically at Italy. Let's begin with this. The PBOC balance sheet. It's an important thing to be tracking what the central banks are doing at any moment. The PBOC has increased their balance sheet just as the other central banks have done over the years. This doesn't surprise me, I know it doesn't surprise you, but ultimately what we can see here is that they are willing to do anything to support their markets. But they're not alone. The ECB has done it, the Bank of Japan, the Federal Reserve, and all of the other central banks around the world. They need to do so, or this market would fall. They have gone to unprecedented levels in order to ensure that we have liquidity in the system. They don't want it to dry up, they don't want it to remain stagnant. We need the velocity of money. We want it to keep going. Even though they've been struggling to do so, and despite all of the efforts that China has gone to, whether it is the central bank monetary intervention, whether that is through lending standards being loosened and loosened and loosened, whether that is the public works projects of making sure that people are building and building and building, and all of the other ways that they've been directly intervening in the markets, all of that, and still we've been struggling to get growth. As I've said, it's not just China. Every country has been doing this. They're using the central banks, they're using the government, creating stimulus packages, they're going about by every means possible. Look at this. Assets of the Chinese banking system. So there's two lines here, two pieces here that we need to pay attention to. You got the line here, which is the total bank assets to the GDP, and you have the bar chart behind it, which is the on-balance and off-balance sheet total assets. I'll point out two things here. So the total bank assets to GDP has increased over these years. That's very clear. Since 2014, it has been rising dramatically. When we look at the total bank assets, we can see that this has been an issue for me because specifically, most of it is off balance sheet. And that's what they've been doing. They've been increasing the amount that they have off balance sheet. It's never accounted for. If you ever see statistics that show you there has been deleveraging in the financial system, it's safer today than it was before. They're not accounting for off balance sheet figures. And it is truly, truly criminal. But if they were to use generally accepted accounting principles, we would have a much different picture. If they would actually have to admit the truth, trust me, it would be a different picture. Credit growth in China year over year has been declining. So after the financial crisis, things had risen up. We saw that and everyone was praising how well things were. But we can see that over the years, there's been less and less and less. So despite the intervention being more today than ever before, because it's global right now, every country has been intervening in some way, and yet still less and less and less growth. What I'm also noting is the fact that despite the GDP numbers being, let's say, around 7%, there have been many individuals who have recalculated and estimated to be much lower. Some predict around 4%, some around 3%. Other individuals say that the GDP number isn't a good number to look at anyway, and we should use different indicators. And I've shown you that here just recently, actually. And these different indicators show us also a slowing down. That is just the way it is. Total debt in China, does it need to be said that this has been increasing right now? As of 2017 numbers, looking at around $30 trillion. They're projecting that by 2022, this would be up to $54 trillion. No government will be able to bail themselves out. No government will be able to bail out another government. And there will be no supranational entity that could ever bail out all of these governments. And they are all going to topple. And when they do, I'm sure they have a solution prepared on the other side. It will be interesting to see it all happen. Now, the development of the Chinese population, you can see that as the years go on, it's going to peak out and then decline. And in that declining phase, we are presented with a very, very big problem. And that is individuals not paying into the tax system, not paying into the social security or social assistance type programs. They're not able to do this. And look, China is getting it later than other countries. Obviously, what we see in Europe, what we see in the US and Canada, the UK, Australia, these countries are going to see it a lot sooner than that. The declining population is a big, big problem. Then I want to switch over to Europe. The biggest threat to the performance of peripheral credit, this is according to these surveys done by the Bank of America Merrill Lynch, and you can see no question about it, ECB QE ending is a big problem for Europe, for the EU. And of course, that contagion which spreads further out from there. I see this as being an issue because of where we've come from. All of the gains have come from some sort of intervention, whether it was a stimulus or bailout package, whether it was a central bank intervention, whether it's some sort of bond buying program that one country buys the bonds of another, and so on. If the ECB ends their QE program, who is going to buy all of the worst debt? Most of the debt that's being purchased today of Italy has been done by the Bank of Italy or the ECB. There are no other buyers. So we've got a little predicament to be dealing with in the near future. The impact of Italy on the overall credit market will be, and what they're suggesting here overwhelmingly, high. Even if Italian political risk subdues, it still highlights the fragility of the Eurozone. That's what most people are thinking right here, according to these investors. Now, I do agree with that. Because of the contagion effect that we have. Think about that. If there's a problem in Italy, there's a problem in Spain, there's a problem in Greece, there's a problem in Portugal, there's a problem so on and so on. We have this. The whole EU is a failure. I mean, I've talked about it so many times, but you can't have all these different governments, different peoples, different cultures, all under one currency, all under one interest rate, because it doesn't make sense. They want to act independently and they can't. They're being shackled by this terrible system. What would be the most supportive for European risk appetite at this juncture? And of course, the ECB delaying the end of QE. That's what they want. And they're going to get it, I think, because the ECB simply cannot end it. If they start to decline, they'll see it in the markets and they'll have to ramp up the printing presses yet again, unless this is the beginning of the global economic collapse. They are the ones, the central bankers are the ones who decide it. So this is an article here and a couple of charts I want to show you that discusses what's going on in Italy. The new finance minister said this: "We are not discussing any proposal to exit the euro. The government is determined to avoid the materialization of market conditions that push us towards an exit in any way." They're trying to stay in. A lot of people were hoping that they would be exiting the Eurozone. That's not going to happen. It doesn't look like that's going to happen. And I wanted to mention that and make that clear here, but we'll see. Target 2 liabilities of the Bank of Italy to the rest of the Euro system. This has been increasing here over the years. Not good. Not good at all. Just wanted to bring that to you. And last but not least, you can see this for yourself. Variation of the items of the balance sheet of the Bank of Italy in May 2018. You could see what they've been up to. I'm not going to cover it here in too much detail, but I just wanted to show it for those who are interested. Just pause the video. You can read it for yourself. I think that what Italy is doing right now could be good. We could have some good points here, but not without a few bumps along the way. I hope they would leave the euro. That would be the best thing for them. A little bit of hard times, but in the end, they would do much better. But hey, that's what's happening. At least maybe we got some bright spots that are appearing. I'm hopeful, but they're still shackled by the whole euro. They're shackled by the ECB, and they're not able to even make all the laws of their own country. So I think that this will be yet more of the same. We'll see what happens over time. That's all for this video. If you found it informative, please give me a thumbs up. When you give me a thumbs up, it helps to support this channel. I do appreciate that very much. And if you want the financial education that you were not taught in school, you went through all of these years of school, you did not learn what needs to be learned in order to manage your own finances. So that's why I took the liberty of writing this book after all of the things that I've learned over the years. Everything from reading, from going to seminars, from listening to seminars, thousands and thousands and thousands of hours of audiobooks, reading books, countless books, and what I have accumulated, put into these two. So I hope you will enjoy them as others have told me over the years. And that's all. If you want to look through them, you can flip through the books at Amazon. Links are in the description below. If you're not into reading too much, but you're interested more in the audiobook version, you can get that at themoneygps.com. Take care.